Bitcoin has ripped past $100,000 in the last few days, and we're fast approaching the previous all-time high of $109,000. But here's the question that's on my mind and a lot of people's minds, and I wouldn't be surprised if we start hearing a lot more calls for this across social media. What if we're heading for a double top right now? That's it. Recession comes, all the bad stuff. Well, welcome to the next 2 to 3 year crypto bear market if that's the case. Well, it's a valid question. It's worth exploring. And so we're going to do in today's video. The answer might surprise you, so of course stick around to get all the analysis. What we're going to give you are the strongest technical reasons and macro reasons for why there would be a double top, aka a big bearish signal for Bitcoin is going to send the price plummeting. Then I'll do the same on the bull side, meaning no double top and prices are going way higher. Spoiler alert, I'm in the bullish category. Surprise, surprise. But after that, I want to hear your feedback about the reasons you find most persuasive or which ones you'd like me to do more research on for another video. So if all that sounds good, let's start with the dirty, stinky, fat, bear, strong technical argument here. Bitcoin's diminishing percentage returns measured from bear market bottoms to the tops. So from the bear market bottom to the 2017 top, Bitcoin increased 10,000%. From the 2021 top, Bitcoin increased 2,100%. And finally, from the bottom to the 2025 top, assuming the 109 was the top, Bitcoin increased 600%. Now, what do these numbers all have in common? Well, the percentage keeps going down. The returns are diminishing. They diminished by 80% from 2017 to 2021 and by 71% from 2021 to 2025. And that's a pattern starting to form. So the argument is that Bitcoin's returns diminish roughly 70 to 8% from one cycle to the next. And since 109K is 71% less than the last cycle's returns, then the top is in. Dirty bears. Pretty simple. Turning the bear's best macro argument here. I think it goes something like this. Bitcoin is correlated with the stock market. It trades like a risky tech stock. Stock market, despite its most recent correction, is still historically overvalued. Bet against America. American empire dominance is over. It's all going to zero. Therefore, if the economy so much as catches the sniffles, stocks are going to get a bad cold and go dramatically down. Bitcoin gets pneumonia and dies in that situation. Now, I think we can all agree that Bitcoin is correlated with the stock market, and it does trade like a pretty risky tech stock most of the time with pretty strong correlation to stocks. Not all the times. There are decorrelation moments. We had one of those a few months ago. Therefore, the real question is, what's the evidence that the stock market is really overvalued? I'm going to get into that in just a second. But before we do, guys, if you're trading cryptocurrencies, you need a good place to do it at. Check out OG cryptocurrency exchange Femex. I've been trading over there literally for years at this point. Available to anyone, anywhere, no KYC. All you have to do is click on the link down below. You're getting a $10 sign-up bonus. You're gonna have up to $500 in deposit bonuses. You deposit $2,500, you get 500 back. 2,000, you get 400 back. 1,000, you get 200 back. You get the idea. And up to $1,200 in trading bonuses. Super cool deal, limited time offer. Great bonuses. Check it out. Link down below. So now let's look at some of those data points. 2 data points, actually. The stock market is super overvalued. The first is the Buffett indicator, which currently clocks in at 188%. Now the norm is 100%. So this indicator says the stocks are dramatically overvalued right now by about 1.9x. Then there's something called the Shiller-Cape ratio, which compares the S&P 500's current valuations with its average earnings over the past 10 years. Now, the CAPE ratio is currently coming in at 34, but the 10-year average, 17. So we've got some consistency between both these indicators, as both are saying that stocks are overvalued by about 2 times, meaning a significant correction should be coming, at least in historical terms of longer historical averages. So there you have it. Essentially for the bears, stock valuations right now are a pile of dry brush on a hot, windy day, just waiting for one little spark to come and burn the whole damn thing down. Maybe it's going to be lower GDP numbers, some second order effects from Trump's tariff shenanigans, even if the worst of it's kind of starting to blow over, or something else. Bonds break. Japan breaks, who knows? Some spark will come and set that brush on fire. Right along with Bitcoin will be immune to that. Pretty grim stuff. Now let's turn to the bulls. Yeah, bulls are sexier, man. Their strongest technical argument for why Bitcoin goes significantly higher is ironically Bitcoin's diminishing returns measured from each cycle's halving, while also accounting for the average amount of time that it takes for the supply shock to really kick in. So from the 2016 halving to the 2017 top, Bitcoin pumped about 3,000%, and it took around 520 days to do it from the 2020 halving to the 2021 peak. Once again, we saw some pretty nice moves. Bitcoin pumped 675%. It took 544 days to do it. 4-year halving cycle, baby. So Bitcoin's percentage gains in 2021, as measured from the cycle halving to the all-time high, which is 22% of what it was in the 2017 cycle. Therefore, if we assume that Bitcoin's percentage gains this cycle will be 22% of what it was in 2021, we get 154%. 154% gain overlaid from the price of the 2024 halving with a projection of 530 days brings us up to $160,000 Bitcoin by this October. So not a double top scenario. Go pound Zam Bears. Now turning to the bull's strongest macro argument. And, you know, I struggled a bit with either the ongoing corporate adoption or the global M2, but ultimately I think the corporate adoption is probably the biggest bull catalyst right now. The global M2 is very important. We talk about the M2 all the time. I'm not going to bore you with that in this video. So, long story short, the bulls can argue that we're seeing an unprecedented tidal wave of corporate money piling into Bitcoin. This is the kind of leverage that's going to send the price absolutely skyrocketing like grayscale Bitcoin did in 2021. It's going to go way higher than $109,000. Now we could run down the list of public companies that are buying Bitcoin right now, or mention all the new Bitcoin treasury companies that are launching, going to start buying tens of millions, hundreds of millions, billions of dollars worth of Bitcoin, but that would be too damn long. It would take way too much time because there's been so damn many of them recently. So instead, let's just look at this. The total amount of Bitcoin held by public companies compared to Bitcoin's price. So check this out. During the 2021 top, public companies held 183,000 Bitcoin. Today, that number is 765,000, meaning that just this one segment alone is closing in on 1 million Bitcoin, which is 5% of the total supply. We're not talking about Bitcoin ETFs or whales or countries or any other stuff, just corporates. Some analysts think that all public companies will actually have acquired this much Bitcoin by the end of this year. So the bulls can argue that this will have an outsized effect on Bitcoin's supply and price dynamics, pushing the price up of Bitcoin to probably 250K or something like that. Get out of here with the double top bullshit bears. I ain't double topping your mom, maybe. Okay, jokes aside, I think those are some of the strongest technical and macro reasons for why there would or would not be a Bitcoin double top coming now or soon, or really how the cycle ends. I'm curious to know which argument you find the most compelling, though, or which you have more questions about. Let me know down below in the comments. But realistically, again, if we're double topping here and we're gonna go to absolute goblin town, and this has been the lamest, dumbest cycle ever, and I'm transitioning to AI and robotics. Screw this bullshit. It's not the top. 109K is not the top. We are not double topping here. And anybody trying to convince you of that, those guys. Thanks for watching.